morning, everyone, and welcome to the morning European crossover webinar. And it's a start for the new week. We'll go in and move this out of the way quickly. And we're seeing the dollar pair back from where we were. We got that close on Friday coming up near its highs. If you take an eye on here, we came right up into the 95. If you look at our analysis, this was posted on the Asian session on ForexAnalytix 8 hours ago. We were right at the 95. Put here, the dollar index remains bearish with resistance level at 95. The 2-hour close above 95.32. We've been talking about that 95.32 all week long last week. Would invalidate the bearish setup. A close above 98.568 on the chart would be required to generate new bullish momentum. One of the things that we even talked about on Friday was traders will probably wait a little bit into halfway into the U.S. session because there's going to be a tweet or a headline, and sure enough, that's exactly what happened. And so we saw that dollar bid up. I thought we'd kind of run out of gas and then pair back, but we stayed bid all the way into that close and felt that we'd end up winding down. I had actually bought some euro and then added again towards those lows. Actually spun out of it a little bit too early, got up a little bit later this morning. And I was pointing out to some people, one of the things I was looking at, and I had just missed it, was I like to look when you see a move like that. I'm looking here at the daily, is to go see right here. Got this. Actually, I was looking on the euro because it was in the euro that I was, which is I like to look at 50 back of the daily bar, and that's exactly where initially the market ran into resistance. And we'll pair this back, and I'll let you know what I'm referring to. 50 back of the candle body, and that's initially where it ran into trouble, and then it backed off. Not a whole lot, backed off about 15 pips or so. Here's the candle body, and there we are at 1660. This is actually right now we're still trying to push higher. This is exactly right where the market ran out of gas at 50 back, and then we paired back about not a whole lot, about 15 back. But I'd even added on down there at 1626. I wasn't here when it hit the 1660, so I thought I'll just spin out of it. But obviously got hung on, got out a little bit too early. But I wanted to go in and reassess. Got up a little bit late, and just wanted to reassess where things were. But certainly, like I said, our analysis in the Asian session, for those of you with ForexAnalytix, I had that being here at 95, and that's where we ran out of gas here. This was posted in the Asian session yesterday, and then we've since then wound down. But we've already expected this. As far as we talked about this last week, to me, I see it as a bearish break here, and eventually still looking. We'll see where it goes to, but I'm still looking for an eventual move down to 92.80-ish with a pause at 93.72. You can see where we're getting this 93.72 at. So dollar giving up some of its gains. We saw the headline about imposing those additional tariffs on China after all, and certainly got the dollar on the bid. Nothing new there. Happens every Friday, almost like clockwork. Now I'm talking about the tweets and the headlines. So let's take a look at where we're at. We'll just take a quick overview of the news, and then we'll go in and get into the analysis. We know that we've gotten a little rise back again here on cable. After a fairly volatile week, let's go in and move this back into a 2-hour chart. States here the pound rose on Monday, buoyed by reports of progress on the Irish border question, an obstacle to Brexit that diplomats will seek to overcome at a European Union summit later this week. A report published by the Times on Monday that EU chief Michael Barnier is working on a plan to minimize physical checks at the border between the two islands by tracking goods using barcodes on shipping containers. Sterling could outperform this week if the EU decides to adopt a more flexible stance on Brexit at the EU summit, says Chris Turner. We'll just blast through this real quick. The moderate recovery of sterling we saw over the past weeks is justified, but for all those who have managed their sterling risk beyond the Brexit date, the problem is how to plan ahead of issues persist. Despite growing confidence, Britain can land a Brexit deal. Domestic political uncertainty remains high. Leaders of Germany and Austria said over the weekend they wanted to avoid a hard Brexit at all costs, but the biggest obstacle is to a compromise might be a hardline Brexiteers in Prime Minister May's own party. Let's go on and move on. And the dollar. Dollar holds gains as the trade war mounts. Well, we're seeing the dollar start to slip back here. You can see here's the dollar index on a 2-hour chart. And as I mentioned, for those of you with ForexAnalytix, we had our Asian update here, which is the dollar index 2-hour remains bearish with resistance level at 95. And that's where he ended up running out of gas here is on that 95. It held up a lot better than what I would have thought. I would have thought, you know, this happens so many times that they sell into it. I would have thought that some traders might have gotten a little ahead of itself on Friday and taken that rally advantage to sell into it, but they stayed up there close to their highs, and we stayed up close to those highs again on Sunday, and then finally we started paring back. But anyway, getting on, President Trump has likely announced new tariffs on about $200 billion of Chinese imports as early as a Monday, a senior official told Reuters. The dollar's benefited from safe haven flows as the trade conflict worsened. Strong U.S. data also helped, but some market watchers believe those flows may be entering after tepid U.S. inflation data last week. Position is starting to reflect that. Speculators began unwinding some of their short bets against euro and sterling, encouraging developments in Brexit negotiations as well. The dollar traded higher against the yuan despite a lower daily fix in the Chinese central bank. And we'll move on quickly. And obviously, one of the things that's been a key thing has been the concerns in Italy with their budget. The Italian government bond yields fell on Monday and hopes for a market-friendly 2019 budget before a key meeting of government ministers, local media reported. Italian Prime Minister Giuseppe Conte has his two deputy prime ministers and economy minister Giovanni Tria are due to meet Monday. Recent weeks have seen a recovery in sentiment towards Italian bonds after top officials said the government will respect European Union rules on fiscal discipline. That's certainly going to go and help the euro. Some reassuring comments from the finance ministry that they will aim for a budget of 1.6% are also helping Italian bonds. Yields on Italian debt fell as much as 12 basis points on the day in early trade. Well, that's certainly a change from what you're seeing here with German bonds here, which are the yields are continuing to move higher. Obviously, bond futures moving lower. And lastly, let's just finish up with gold. Gold, it was a huge week on gold. And one of the things I posted here in the on ForexAnalytix, I don't know if we have that one here. We'll get to this quickly. Okay, here we are on the gold. Let's pull this back so you can see that clear. Follow through damage. Price action on Friday has gold on the precipice of key support, 1197. Bulls need a 2-hour close above 204 to stop the bleeding. A 2-hour close of 1191 opens a test of 1178. You can see here 1197 is huge. We'll get to that quickly. 1197 is absolutely huge. And I actually pushed this out so we can see it a little bit further, but this isn't. This is actually a 480-minute chart. We'll get back to the 2-hour, but you can see here. The reason I did this so we can see this clear. You can see this trend line here. We fell back in. Obviously, a lot of damage was done, and we needed to defend that 1197. That is the horizontal support, which is absolutely huge, and it happens to coincide with the trend line support here, so it's huge. We need to get above this 1204. We'll move this back to a 2-hour. We need to get above that 1204 on a 2-hour close to stop the bleeding and try and do some repair work, because certainly this market took one heck of a hit. On Thursday, it was a big disappointment, and then we saw the follow through on Friday. We're looking at it now on the 2-hour chart. There you go. See, so we're working up from that 1197, but we need to get above 1204 here to get things going. So let's go to the news before we jump right into the bias chart. Always do a quick flyby of analysis and news. So we'll hit gold real quickly. Gold inched up on Monday as investors look for short-term gains using the metal's recent narrow range amid increasing Sino-US trade tensions. It's a range-bound trade as people watch for moves in the dollar and developments in U.S.-China tariffs. Gold has held a $25 range for the past few weeks and could hold that till the markets get a specific direction on rate hikes. Markets are nervously awaiting Washington's announcement of new rounds of tariffs on Chinese imports. The price action shows that the influence of the news coming out of the tariffs is warning a little bit, says Jiming. Though gold is generally presumed to be a safe haven asset, the month-strong trade rift between Washington and Beijing has prompted investors to opt for the U.S. dollar in the belief that the United States has less to lose from the dispute. We have to suspect that the dollar will regain upside momentum, especially if the trade environment takes a turn for the worse ahead of the Fed's month-end meeting, INTFL analyst Edward Meyer said in a note. Although investors are expecting yet another quarter-point rate increase, the concern is that a change in policy wording could make a more definitive case for future rate hikes. With that, we'll go on and move straight on into our analysis. Coming into the States, the only thing we have today is going to be Empire State Manufacturing. Coming into the States as far as news. So it's being light news. So let's go and move into the euro. One of the things we were looking at on the analysis here on the euro was, in case we saw further pressure from the dollar, support came in at 1608, confluencing here with the 1602 if we saw further pressure. But this 1623-ish area here, some good support. They did go on and bounce. We did see the dollar fade as opposed to continue to move higher into the early New York session, which I thought we might have seen. We can see here we've got this support, zone here back at 1658 that we fell into. The market might want to hang around here and maybe with a little bit of a downside pull on the announcement of those expected tariffs, and then we'll see what we do here, which is probably going to be around the 1635-ish. That's why I ended up spinning out, but I got up a little bit late. I wanted to get out of 1660. We talked about that. The 50 back of the previous daily candle body. We'll get to that again, just to show you what I was referring to. So just take the 50 back of the body, and that came in at 1660, and that's actually where the market was running out of gas at the time. I think it stopped right there to the pip, or maybe got a half a pip before, and then turned around and pulled back about 15 before reasserting itself. But moving on to the 2-hour chart, which we focus most of the time on our analysis. So we're starting to pare back a bit. I think that if they make the announcement on the tariffs, let's move this over here. There we go. We can go in and pare back. That may spook the market. So the market, anyone who played it for the long side, probably wants to ease back a little bit, let them make the announcements for the tariffs. You know what? We've got some support here around 36. You know, when I did the analysis, I was saying, hey, look, it's 1608. This huge area is huge, it's 1580, but we have to see something really pretty bad for it to go and drop back here. And I already think that the market's so used to the dollar paring back, usually after these announcements. You don't want to stretch, and we're going to go with that. I'm going to go with that Asian analysis. And we had 1608 coming in here. If we get a little bit overdone, there's so much support here. We had the 1623 and 1609 and 1602 is a 61%. We did find support here, which actually is confluence with the 50%. So I'll tell you what, we're going to go. You see this coming right across here, and I'll show you. Right there, that's 1606. So that's going to be our support in case we do get a slide. Maybe they make an even bigger one, say it's $300 billion worth of Chinese goods. So let's go with 1606 in case they clean out the stops. I'm going to give a little bit more room, only because the market's a bit on the defensive. A lot more room than we would normally want to give from this level. But once again, we'd come off and we fell into the zone. It's got the bulls on the defensive, so we could easily slide down here. If we come down here, I think they would clean out the stops, and then your back end support would be the 1580, and I think we'd end up holding, and over time we'll start to work hard. But right now, the market's a bit on the defensive. I think we can easily pair back down here to this 1636-ish ahead of the announcement. Now, as far as resistance, it's going to be right there. See that coming across? I'm going to go with 1680 for right now. 1680 for resistance. But as I mentioned, with the expected announcement of those additional tariffs, that should probably put the market a little bit on the defensive from here. So it's going to be 1680 for resistance right now for today. Still in a range. And let's go and take a look here at the cable. This one has been tricky at this point. It got past our level, so it's bullish. It's on a buy. We had that from analysis from last week. We're still expecting to move up here to 32.17, the 38%. I think we mentioned a pause at 31.68. You know, it's a slave to the headlines, but with each passing headline, we seem to keep moving a little bit higher, a little bit higher. Even when the headline is negative, we're still holding up very well. And this area here, a 23% back, actually coincides here with some good support here. See that 30.31 right here? Right there, comes in very good support. As long as we stay above this 30.56 on a 2-hour close, and we talked about the significance of 30.56, that's our pivot. And you can see how important 30.56 has been. So once again, maybe we get some tough news on this tariff talk, or maybe we get a headline. So I like this area right here, which is confluence with the 23% back of 26.62 to 31.44. And that's going to be 30.31. It's a ways down. In case we do slip, where would you be trying to pick it up? The 30.31. Once again, just like the euro, we're giving it far more room than we would like to give it. We generally have our analysis or our support level, resistance levels a lot closer, but once again, I think that we've had a pretty good run here in the cable. So we could maybe see this thing slide quickly, and this is where you'd be looking to go in and pick this thing up. Once again, like I said, as long as we can stay with a 2-hour close above 30.56, everything still looks pretty good. Now, as far as resistance, we're going to stick with what we had with a pause. We're looking for 33.17 with a pause at 31.70, 2 pips above that, and I don't see any reason to change. We'll keep that at 31.70. There we go, 31.70, and we're bullish now. From here, let's go move into the Aussie. Things have started to turn around here for the Aussie. There we go. Well, we had our resistance here at this key level, the 72.55, and things seem to be turning around here for the Aussie, but then it took a hiccup with the rally here in the dollar. Right there, coming across, is going to be the resistance, 72.08. For right now, it's going to be 72.08. Obviously still bearish. And let's go and take a look here for support. Well, there's no change here. You can see you're just going straight up with the technicals, 71.30. That's where, and actually we could even move that a little bit lower. I always like to go with the closes on these bodies. So it's actually right there, 71.28. Once again, still quite a bit of a dip. Lower here, there's also some support coming in right there. Tell you what, we'll stay right here with this level here. 71.30. That's what we're going to go for support. Once again, just to give you an idea where the market could target if we see this dollar, let's say they announce far more than they expected in the tariffs, and certainly the Aussie is one that is traded as a liquid proxy for China, so certainly would be negatively impacted if things worsen, and that would be the target that they would be going for. Let's go and move into the Kiwi. We're looking at 65.43 and 66.07. Well, that looks like that's where they went to, the 65.43, and successfully defended it. Well, I don't see any reason to change that. We're just going to go and keep that 65.43. You can see that here. And on the upside, we have 66.07. Let's take a look at that. We're just basically trapped in this range. There's 65.43, here's 66.07, and I'm not seeing any reason to change this at this point. So, although nothing's really happened with the Kiwi, you can see we're stuck near the lows in a very, very, very tight range. So we're going to stick with that, which is going to be, as I said, 65.43, which the market was able to go and defend that and move higher on up here to 66.07. Let's go and move in now to the dollar CAD. We've really seen some good movement here in the dollar CAD. And this market had that pullback. I think it was the Thursday, late U.S. Thursday session. I think it was a Wednesday. Late Wednesday in the U.S. session where the market really came under some pressure. Obviously, a lot to do with the whole NAFTA business, but certainly we got this breakout and we fell back below this trendline breakout, and certainly that now has the market on the defensive now. And we're having trouble with not only that same trendline area, but also had mentioned as our risk resistance came in. We were looking at it actually on Friday. Some of the traders had picked it up and rallied, and we had resistance at 30.45. Really said, I think Joe in the chat room is the one that trades it so well. I know Blake got long the dollar CAD. I didn't. I think some other people got long too. I wish I would have. It was a nice run up from that 30.23 right up in here to this 30.45. We're going to get rid of this now because it certainly has invalidated that trend line. But this resistance is still key here, this 30.45-ish area. When we're looking as far as resistance, well, that is going to come in right there, 30.73. That's 30.73 would be the resistance. And certainly any pullbacks, the market is going to be looking to sell. You can see our resistance came in from Friday. Remember, we had 30.45, and this is and that was our bias chart resistance. I don't know if any of y'all taking the screenshots of the bias chart, but like I said, we actually made it. I think we made it to 30.48 at the time. We backed off about 25 pips or 23 pips, rallied back up, took out that a little bit high, and then we struggled, and obviously we're working a little bit lower here. But we're going to move that here now to 30.73. Support now if the dollar further weakens. Well, this market is really taking a pretty good lick. We're just going to go with this 29.73. They may be able to take this out by just a bit if we were to roll over. And maybe we clean out the stops, and then we gently start to balance ourselves out. So we're actually just going to move this a little bit lower here, which is 29.64. So we'll pull this out so you can see a little bit clearly what we're referencing. So I like this 29.73. That would take out the lows, but a little bit of a push further. And you can see here, right, these bodies comes in right there. And this previous high, confluencing with these bodies, 29.63. I want to move that. It would, if, like I said, if the dollar continues to weaken, I think we could make it down there. Maybe we flush out the rest of the any longs here, and then maybe from there the market tries to balance itself out and settle, and maybe we try and work a little bit higher. We might get stuck in a range, but that's what I'd be looking for support, 29.63. But at this point, any rallies back after that disappointing rejection, I think this market will be looking to go on and sell any rallies. We had a pretty good run here if you look at it in the dollar CAD. So we can still make it all the way down here to 28.91. That's at 38%. You still haven't done too much damage to the market. It's just disappointing for any longs who thought we might go beyond 32, but you can easily make it down here. Sub 129, and still the market still be able to retain a bullish momentum. Whether we could do some work from here and start to work higher. So the pressure still remains, but my point being is, like I said, we can go down here and clean it out, and still the market, from where we've been up here, you can still pull down there. It's not too late to be on the short side, and you would still have people that will be looking longer term from a bullish setup. So I don't think the dollar's going to totally just to come apart and the wheels are going to fall off, but certainly I think the dollar is in need of a correction. So I'd like to move down here to about 29.63. Maybe the market balances itself, tries to work a little bit higher, push a little bit lower, and we'll see what happens after that. But I think it's susceptible, especially with the ferocity that you saw here. We barely even got a bounce. We turned around, made new lows again, and we're struggling at this point also. Excuse me. So we might see some continued pressure here with the dollar Swiss. Let's go and pull this back here. Tell you what, we're going to go and take a look at this on a daily. Certainly this looks ominous, and certainly would suggest that maybe the dollar may have even further to go. We'll take a look at this on the fib. We're coming right into the 50%, which comes at 96.28. We do have some support there at 96.23. That actual support is actually coming in from the 2 hour that we have, but we'll see what else we can find here. On the daily, very key that they defend. Wow, that's still a long ways away. 96.07. That's going to be key on the daily, 96.07. Let's go and move into the 2 hour chart, see if we can find something a little bit closer to line up as far as a confluence. Well, if the dollar does weaken, that's where we would likely want to go to a target, that 96.07. We're actually showing here 96.15. 96.15, this is what we're going to go with as far as our support here for the dollar Swiss. And we already had 96.16, so we're going to keep that. Now, as far as resistance, well, we had 96.78 and the market ran out of gas at 96.81. Certainly looks to be under quite a bit of pressure. We're going to keep the same here. Look at that, 96.78. We'll just keep it the same. But you want to keep an eye on this. Once again, it's not the canary in coal mine that it used to be. The Swiss has been doing its own thing for about the last 4 months. But it's something you want to go in and keep an eye on here. And one of the things that helped me buy the euro on Friday when I added it 96.26, but I've already spun out. Got up a little bit late and missed that opportunity to sell it or dump it at 96.60, and I'd come in probably a little bit shortly, but I came in at 96.46, but I added 26, but spun out of that apparently too quickly, but I missed my target earlier in the morning at that 96.60. But one of the things that gave me confidence at that time to buy it was that the dollar Swiss was staying so low. But you want to keep an eye on this if we get this dollar rally to see how the dollar Swiss is reacting. So we're going to go and keep the same support and resistance here on the Swissy. And let's go move into the dollar yen. Now I did some analysis here with the dollar yen here on the side, and let me go on and see if I can share that with you. Okay, here's my take on the dollar yen. Says the dollar yen is above the bias pivot, which is 1166. You can see that right here. Dollar yen is above the bias pivot of 1166. Respect the technicals, but I'm not a believer when I see the 30-year bond futures making new lows. You can see that here. And the dollar yen should be much higher. Price action of the last 2 weeks is akin to a yo-yo. Nonetheless, the pair is bullish while the market is above 1166. For now, I'm an interested bystander in the passing parade with an eye on ZB and ES for clues on the next move. So we're actually going to go and look here on the daily. And this is my concern here with the dollar yen. You know, when I look at it, and this is look on the daily, to me, it should be a lot higher. And when you look at, quite often this market trades inversely to the bond futures. Most people look at the 10-year, I have to look at the 30-year. boy, look at this. It's just been down, 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 down. Obviously, which means rates going higher, higher, higher. And my thinking is that the dollar yen should be a whole heck of a lot higher. But there's no denying that we're above this bullish pivot of 11, this bias pivot of 1166, and it's bullish as long as it's above that pivot. But I do have a problem here. I mean, once again, you can't. My problem is also has been, if you look at the last 3 weeks, look at this action: up, down, 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 then up, then down, then up, then down, then up, down, 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 up, and then. To me, it feels like as if it's just kind of holding some people hostage. One of the things I'm also looking at here is the S&Ps. I've actually taken a look on a 480-minute chart, basically an 8-hour chart, just to get a better feel of, where you don't get lost in for the forest, can't see the forest for the trees. So to me, it's important. I want to watch this S&P. This is actually an 8-hour chart. I never looked at, generally I just focus on a 2-hour, but I thought it was good to get a little bit longer view to see what this market's doing. And to me, the important level obviously is this 29.08. And I just want to go and keep an eye on this dollar yen. I'm not doing anything, but I kind of a hesitancy to go in and believe. We can't deny where it's at, and that's why I said respect the technicals. But it just seems like we should be breaking out and moving a whole heck of a lot higher. So for me, the key resistance level is going to be this 1223. Can't deny that it's bullish. As long as it's above that 1166, got to give it its due. And let's go and take a look at it here. Same thing. Well, I guess we'd have to look at that once again, that 1166, and maybe just a bit below the 1166. Actually, just going and converting this chart and have several years worth of intraday data. That's what takes a little bit of time to load up. So here's the 2-hour chart. We're looking for support. It's going to have to come in right there at 1148. Right there, 1147 and a half. Call 1148. That's where I see the support. But here's our resistance level from Friday, our bias chart resistance, 1211. Maybe with the dollar on the announcement of these trade tariffs, it gets a little extra kick. Maybe it does. But I still question what this dollar yen can go on and do here. So 1148 is going to be our bias chart support, and you can see that coming in right there, 1148, right there. So that's going to be the bias chart support. And with that, let's go on and move into the cash dollar index. Now, we were talking about the cash dollar index earlier, and we done the analysis during the agent session for those on ForexAnalytix, and the resistance was going to be 95, that's what we were at the time during the analysis, and we reviewed that earlier in the show, actually at the beginning of the show. So let's go on and move into the cash dollar index. Actually, our bias chart resistance for Friday was 95.02, and our analysis in the Asian update was resistance at 95. This is actually where the market did run out of gas, actually at 95, right here. So that's going to be our resistance. And one of the things that we looked at here with the cash dollar index, actually from Thursday, as we started to break down and we came into Friday, was the break of this area. So nothing's changed. The only thing I did put on here, which really that's been the same number we've been using pretty much all week long since last Tuesday, which is, I believe it's 95.32. So once again, we're looking to sell any rallies to 95. That's the resistance. And the only thing that would invalidate this would be a 2-hour close above 95.32. Doesn't turn it bullish, but it would invalidate the bearish setup, which is the analysis that provided for the Asian update. So with that, resistance is 95. So we're going to go and keep this. We'll click 95.02. Our resistance level is 95. Maybe if we get a headline with all this tariff business where we might get a big jump up, and this would be coming in around 95.22-ish. But it would take a 2-hour close above 95.32 to invalidate this bearish setup. Overall, from a longer term perspective, as long as it stays in place, looking for a move to 92.80-ish with a pause at 93.72. Here's that area, 93.72. There we go. Now, on a shorter term basis, where would we find support? Well, if the market we get beyond these stops, we're going to go with 94.27. That's still a good 50 pips away almost. There will be a pause right in here, 52, but my thinking is, like I said, if this market gets away from itself, we can start to hit some stops, and that's why I don't want to have the support levels too close. Actually coming in right there, which is going to be 27. 94.27. I think we would have been down there already had not been I would say the expected headline / tweet from Friday. And as I mentioned, traders are creatures of habit. And one of the things we talked about when the year was pulling back is we indicated traders are probably expecting a tweet or a headline to come out by mid-New York session. And if we don't get it, then you could fade it. And certainly we did go in and get that headline. Only thing is, being a Friday, the market went with it and just stayed with it, and they kept the dollar on the bid going into Friday's close, even coming into the Sunday session where we hung around this 95, and then finally we were able to go in and slide back. But we are expected, there's supposed to be an announcement about that additional, in this case, an official announcement of additional tariffs on Chinese goods. We'll have to see how that plays out. Let's now go and move into the gold market. Well, we did go and show the analysis from the ForexAnalytix and indicating that gold was on the precipice here, right here at 1197. How important that was, because not only was it a horizontal level, which was huge, you could see that coming across, but it also happened to coincide at the time with the trend line support here at 1197. And one of the things we remember, we liked gold from a longer term perspective, moves down to 1204, as long as we didn't get a 2-hour close below 1197. 2-hour close is really going to go in and put this market in one heck of a bit of trouble. And if we were to close below 91, really opens the door for a test down here to 1178. There'll be some support around 84, but we really need a 2-hour close above 1204 to stop the bleeding. Well, lo and behold, and we had that analysis, look exactly where they ran out of gas, just right before this 04. So resistance obviously is going to be right here for 1204 on a very short-term basis. If the dollar gets loses a little bit, remember the 1207 was the key daily breakout, and they really need to get back above 07. On a short-term basis, it is 1204, but if the dollar starts to slide, look for them to make a beeline towards 1207, and that's where they would have a little bit of trouble. I mean, if they can get beyond that, that would be absolutely huge. But on a short-term basis, our resistance is going to be the 1204. And if they can reclaim 1207, that'd be huge. Now, support, well, it's going to be 1197. And that's key on a 2-hour close. If we get close below 1197, essentially it invalidates this bullish setup that they have. I mean, it's already, as I mentioned, it's on tenor hooks. It's just in, we've got this breakout. It was really a disappointing action on Thursday, and certainly we saw that follow through on Friday, and the market's really come under some kind of a heck of a bit of pressure. But like I said on the announcement, you could maybe see this market intraday come back up here, but the key thing would be to recover and reclaim 1197 on a 2-hour close. If the market were to take a dip on this Chinese headlines, rumors of additional tariffs on Chinese goods. Still think that the market's open. One of the things that they're concerned with also is they believe that there will be a Fed hike, a quarter point priced in, but will they change their language? One of the things that did help is that the inflation numbers were rather tepid from the other day. And so if the Fed were to dial back just a bit, that may help the gold market. So if we could, maybe once again, you want to keep this out from a little bit medium-term perspective, although it certainly looked like we're heading that way in a short haul. But if we can get this, if the Fed does not turn out to be too bearish, or not bearish, but too hawkish, it can open the door for a quick move, and you have to be concerned with this. But like I said, this action from Thursday really put the market on the defensive. The key is going to be the defense of 1197. We have to defend that, and in order to not turn it bullish, just to stop the bleeding, we need a 2-hour close above 1204. 2-hour close. So let's go and move into the bonds. We already mentioned the bonds from before, and to me, I think that the dollar yen ought to be a heck of a lot stronger in relation to where the 30-year bonds is, because generally we have the dollar yen trades with an inverse relationship to the 30-year bonds, or for some people, will follow 10-year notes. I prefer the 30-year bond. That being said, the pressure remains. Now, the pressure is also remaining here with the bunds. This is certainly giving the dollar some underlying bid support. Let's take a look. There is some good support coming in, 4105. And although it's a good 10 ticks away, or 10 ticks away, certainly if we get that news headline, it might pressure it and send this lower. I mean, right now we've been in a situation where the market trades at times opposite. It used to be that if you employ tariffs, it actually works against your currency. But in this case, the thought being is that the U.S. would fare better, and also a result of the tariffs would be higher inflation, which would keep the Feds pedal to the metal. Hence, we've seen a stronger dollar. Although generally in the past, what you've seen is you see a country imposing tariffs that generally works against their currency. But it's been an opposite spin because we've had divergences with central banks. And if a result of that additional tariffs would be inflation, which would keep the Fed raising, which would keep the pressure from the upside for the dollar. So that being said, support would come in at 41.05 here for the 30-year bonds. And let's take a look here for support. One of the things you have to wonder is, at what point do interest rates start to put a crimp on the S&Ps? And one of the reasons why, and I never looked this far out, but I wanted to look out, and we're looking at a 480-minute chart, and I did it for perspective, and certainly you can see how important it is for this market, 2908. And they really need to reclaim 2908. If we start to shy away from it, it'll be interesting to see what the momentum is going forward. But you'd have to think that the higher and higher we go on rates, at some point, it's going to go and imply pressure. Now, like I said, if the market was down here, then you probably say, well, take it with a grain of salt. We've already pared back. But look how high the market is. We're talking about the S&Ps. Look at that. And then turn around and look at where rates are. You have to wonder, where you'll start to see the effect here. And that's why I'm going to keep a very close eye on the S&Ps, and why I have a hard time believing this dollar yen up in here. And we got to our 12.11, but 12.23, we'll keep an eye on this whole thing. It's very interesting. It's still it's bullish as long as it's below that 1166, but I'm a doubting Thomas on this one. Resistance on the 30-year bonds right here. 4202 is what I see. I'll pull this back. Right there, 4202 resistance. Obviously still woefully bearish. Let's go and move into the bunds. Man, these bunds just don't want to give it up. They just keep going lower and lower, and all you can do is just go by the levels. And you can see this is a pretty key level right here, you see? So, target-wise, actually they've already gone and hit it. Actually, this is it's still above it. That trend line was off. There we go. So when we look at that trend line, support showing right there, which is 58.84. That's what's showing on the bunds. It may be hard to see it, but that's the next level of support, which is 58.84. Resistance would come in right there, 59.14. That would be resistance, 59.14. Wasn't that long ago, that was support. And let's go and move into the DAX. Resistance is going to come in right there with these little body touches, and that's going to be right there at, we'll pull this back so you can see it clearly. See right here, 12,140, 12,140, that would be resistance. Support. You can see that coming all the way across here. See that? That would be support. 12,048. 12,048 for support. The 37 ended up holding up well overall. So here's the bias chart for the European crossover for today's action. Euro's still holding up really well. Still holding up very well. I didn't know if the dollar was going to try and keep its pressure up, but we actually, this in the area, the whole area here, the 1620-ish area, I thought 23, but 20-ish area held up fairly well. Thought that we may see the dollar continue to be under pressure or remain, I mean, I meant to say upside pressure. We'll see what happens from here. Cable still with a very nice little bid in here. I don't know if we'll see, like I said, some pressure with the announcement of the tariffs. Going to switch this back into the Aussie. Surely the dollar remains under pressure here. It'll be just a couple of minutes before Dale's up. I think we're going to have Dale back, so which is good news. Sounds like good speed, good recovery for Dale. Getting back to the dollar yen, our bias chart resistance from Friday was 12.11. We actually have our bias chart looking at the daily at 12.23, but I really am a doubting Thomas on this dollar yen when we look in, when you consider where 30-year bond futures are at. And I'm just curious to see how well the S&Ps are going to be able to hold at these levels. When you consider where 30-year bonds are at. And look at these rates. We just continue to go lower and lower here, which obviously higher rates. Do you have our bias chart support 7 ticks lower at 41.05, but you can see the pressure remains here. And as we mentioned with gold, upside resistance is 12.04 intraday. The key would be 12.07 if we see this dollar start to fall a little bit further back. But we are in a very key area here. We need to defend that 1197. That's not only the trend line support, it's also key horizontal support. We lose that 1197, and that's really going to invalidate any type of an upside move. It's going to put the market under a lot of pressure. So that certainly has to go in and hold up. And just a second, we're going to have Dale coming up. Hang on one moment. Now that I started using the Yeti mic, I have some problems getting the audio or that I can hear when someone else comes on. So I just have to have it hooked up with my iPad, so I'll be able to pick up the audio and be able to hear Dale when he comes on. And
Paulie, it's
glad to
Paulie.
hear
Can you hear me?
Dale
Hello.
after he was out last week, very sick. So I'm glad to go in and have him back here into the webinar.
Hey, Paulie. Testing, test. Can anybody hear me?
I can hear you, Blake.
Okay, just making sure
So
that.
here's the bonds chart, and we're all ready. I think I hear Dale.
No, it's Blake.
Hey, Blake, what's up?
Hey, no, Dale hasn't. He hasn't chimed in yet, so we're not sure if he's coming back or not. Well, obviously he's. We didn't want him to push himself, so he is not in at the moment. We were hoping he would be in, but he, when we talked to him over the weekend, he was still, under the weather, and he was like, well, I'm gonna come back Monday, and we're like, well, if you're not feeling 100%, we'd rather you, recover. Exactly. So, yeah, he's not back yet. So as it seems. So, how's it going over there?
Okay, but I spun out of my euro too early, but a little ticked at myself. But those things happen. I was talking in the chat room. I was going to buy the euro at 16.46, which I did, and then as it slipped further, I picked it up at 16.26. Added, and I hung on. And my intentions were to sell it at 16.60. Well, it got to 16.60, and I missed it. And as it pulled back, I said, let me just spin out of the whole thing. I think it was at 16.48, and now we've pushed it a little bit higher. But the analysis worked out very well. I mean, for the Asian analysis, had it to, the resistance here to still sell the dollar against 95, and we've certainly continued to rotate lower from that 95.
Yeah, I'm sitting here looking at the market. It's obviously a very quiet session thus far, and there's not a whole lot going on. But the dollar's a little weaker going into the open here, and I picked up some dollar Canadian. You were talking about me being long the dollar Canadian.
Yeah, you were on Friday.
Yeah.
Joe and a couple of other people in the room.
No, and it was unfortunate because I was up really pretty good in the dollar CAD, and by the time I got out, because I didn't take profits, and by the time I got out, it was just a very small gain, and I was very frustrated actually on Friday because of that. Because of the way I traded, I'm like, I was nice and profitable, and it just started to get back those gains, as we got into Friday afternoon or, later into the morning. And I'm like, I just took a small profit where I could have, banked like, I don't know, 25 pips and on a pretty sizable position too. And, I think I got away with just a few, 10 pips or something like that by the, when it was all said and done.
Y'all were getting along, and I just completely missed that boat.
Yeah, well, I should have been a little quicker to take profit. So it wasn't anything I wanted to write home about. But the dollar is weaker. We've got the cable that's hitting highs. The euro's at highs of the session. Actually, the euro just clipped the 50% retracement, and and I'm surprised to see the dollar as weak as it is with bond yields as strong as they are. Bonds are, as you pointed out, extremely.
I'm glad you pointed that out, because one of the things I did in the Asian analysis, and you can see these bonds, I've got couple of key concerns here. Is there's no doubt that the dollar yen is bullish because it's above this bias pivot. But I tell you what, I'm a doubting Thomas. Here's the dollar yen on a daily basis. It's above that key, 1166. But to me, the dollar yen should be a whole heck of a lot higher when you look at where the bonds are. And one of the things I have a concern with the bonds are, as yields keep on moving higher and higher, and I never look at the S&Ps or any other market, but with this type of a time frame, but I actually moved this to an 8-hour chart to get a better perspective. And you can see this 2908 is huge. And I'm just wondering, at what point do interest rates start to go in and pull or work like an anvil, not an anvil, but an anchor on this S&P? I don't think the S&P is going to heck in a handbasket, but if you see the setup here, I think it's going to have a tough time trying to get beyond this when you've got, yields continue to move higher. I mean, we were at 14 and right now we're at 10. We have buy shelf part support at 49, 41.05. But with these bonds moving higher, why the heck isn't the dollar yen at least, and I'm not joking, at least 50, if not 80 pips higher? So our buy shelf resistance is 12.23 for today. But this is one market I would certainly keep an eye on, because if we start to see equity start to slip in the next few days, or of course, I think this would be a very nice market for a correction. It's certainly not a sell, but it should be a heck of a lot higher. And that's my concern.
Yeah, I think it should be too. And but the it's same thing I talked about during the week ahead video. Is I'm really worried that with the dollar yen, I just don't know how it's going to respond. You can see it's kind of mixed because of the little bit of risk aversion that we're seeing too.
Exactly. And if you look at it, one of the things that has me as a doubting Thomas, I'll get back, I'm glad you mentioned that, is if you look at the action of the last 3 weeks, and I'll show you right here. Look, it's down, up, down, down, up, then down, 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 then up, then down, then up, then down. There's no rhythm or no, as you used to refer to, as price structure. To me, it just feels like this market is just being backwards and forwards. So by the time you get long, you're underwater. By the time you get short, you're underwater. And that's why I feel like if you look at the action of the last couple of days, it's just barely hanging around here. And to me, I would keep an eye on what these S&Ps and bonds do. If the bonds end up coming back a little bit and the S&P starts sliding, I think that dollar yen could end up correcting. It's certainly bullish. You can't deny it as long as it's above the bias pivot, but it sure looks like it's getting up there in the, with the help of helium, and I just don't know how long it's going to be able to hold this up here. Honestly, I don't even know what the heck it's even doing up here. It seems like it should be, and I forget where the bonds are, it just seems like it should probably be around 110, so it really opens the door for this market to slide in. If you remember back then, this is when they had that story with, I remember at the time we were looking at it, and this is when the BOJ had that story about possibly adjusting or raising rates, and the market lost 300 pips, like in about 2.5 or 3 days. So I would be very cautious, like you said, how it reacts as risk aversion.
Yeah, I don't know how to respond to the U.S. dollar Japanese yen at this point. I think that there still is a risk of a little bit of a squeeze higher in the pair, but again, when I don't have a feeling of a currency pair, and specifically the U.S. dollar Japanese yen, my first inclination is just to leave it alone, at least at this point. But the dollar overall is pretty weak. We've got the Kiwi hitting new highs, the Aussie hitting new highs, the Canadian slipped below the breakout point from Friday, but the euro dollar is trading up probably back to a big trend line, which will come up around 117. But I think it's mostly being dragged higher right now by the cable. There's a headline that just came out, says the EU says some parts of draft withdrawal has been agreed in principle by the UK and the EU negotiators, although nothing agreed until everything is agreed. So it's a little warning, like, yeah, we're getting close, but we still have more. We still have more to work on, but it hasn't stopped the cable. The cable is strong, and the pound's still looking pretty good. Actually, the cable's about ready to hit new trend highs. I think above 130, 150, we might squeeze a little further in the pound. So, yeah, it's tricky. It's a tricky market right now, and I'm not clear on. Did you see gold just hit new highs in the session too?
Yeah. Here's our resistance. I was telling the analysis I did over the weekend. Said, hey, we're on the precipice right here. 1197 was key support, horizontal, and it was also trend line support. Now 1204's resistance, we need a 2-hour close to stop the bleeding, but remember 1207 is that breakout. So if the dollar can continue to fall, 1207 would be the area where we'll probably have a little bit of trouble, but we need a 2-hour close above 1204 to stop the bleeding, because that action from Thursday, which was followed through on Friday, really put the bulls on the defensive and probably took the wind out of the sails of a lot of gold bulls.
Yeah. So what's like, if I had to ask you, what is the one trade that you really got your eye on today, what would you say it is?
Other than just selling the dollar as if I was selling the dollar index, as opposed to, I'm ticked at myself for buying the euro and then having to hold it over the weekend, and then I spin out too early. And then when I spun out after it pulled back. But the one thing I feel confident, and I felt confident since last week, is selling the dollar and selling the dollar in any rallies after this break. And I put on the analysis on ForexAnalytix. The only thing that will invalidate this is a 2-hour close above 95.32. It doesn't turn it bullish, but it would invalidate the bearish setup, which I still think, as long as we stay below this, opens the door for a move to 92.80-ish. With a pause at 93.72. Here's a 72, but I think we're going to go eventually to 92.80. We talked about this on Friday. I said, you know, we're probably traders or creatures of habit. They're going to wait for a headline or tweet that's going to come out mid-session Friday. And sure enough, as the sun comes up, you know, we got the headline, and there went the dollar on the bid. Only thing is, on the way up, I tried selling it with the euro at 94.89-ish when I added, and it still kept on moving higher, and then we did run out of gas at 95. I just wish I hadn't spun out of the euro so quickly, but I believe in selling the dollar until it proves itself with a 2-hour close above 95.32. I think the trade is to sell the dollar. We would have to move much higher to turn this thing bullish. To put it on a bullish momentum, we'd have to have a 2-hour close above 95.68. But right now, to me, the dollar's bearish, and the market knows, keep selling those rallies. Because it keeps falling every time. I just didn't trade my euro very well.
Got it. Okay. Well, I'll take over from here. And like I said, I think